Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce our subject matter expert panelists and our partner sponsor, let me share some brief housekeeping items. We'll have Q&A at the end of the presentation, so please use your GoToWebinar control panel to ask our experts questions. Next, this webinar is CPE eligible with 4 polling questions, so please answer each poll for CPE or to benchmark your peers. Please allow up to 1 week for your CPE certificates. Also regarding CPE, you'll receive a brief survey directly after the webcast today, so please complete that. And finally, you'll receive a link to this webcast via email in the next 24 hours, so no need for notes or screenshots. With that, I'm pleased to introduce you to our sponsor and partner, Billtrust, a B2B order-to-cash software and digital payments market leader. Billtrust helps the world's leading brands move finance forward with AI-powered solutions to transition from expensive paper invoicing and check acceptance to efficient electronic billing and payments. With more than $1 trillion invoice dollars processed, Billtrust delivers business value through deep industry expertise and a culture relentlessly focused on delivering meaningful customer outcomes. Now it's my pleasure to introduce our subject matter experts, or SMEs, panelists Steve Emberland and Barbara Salazar. Steve is a SVP Finance for many years, and most recently at Carrot Fertility with 30+ years experience, multiple controllerships, and earlier stints with the big 4 accounting firms, PwC and Ernst & Young. And Steve is an active CPA in California. Barbara Salazar is a CPA and Chief Financial Officer of 7X Group, that is in construction, real estate, and other industries, with more than 25 years of F&A experience. Prior roles included VP Finance, CFO, and Corporate Controller, with experience in SEC reporting, SOX compliance, and audit at PwC as well. Barbara is a CPA and an Ivy Leaguer with an MBA from Stanford. Welcome, Barbara and Steve. And before we get started, let's go to video, and please each panelist share some background on your company, your F&A department structure, and your AR responsibilities. Steve, would you like to start?
Sure, happy to start. Thanks, Neil. Good to be here. So before I get started, good to note that after 30+ years, I decided to take a career break, as my wife and I have twins that we're launching into college here in a couple of months. So lots of travel to schools and personal family trips this summer. So I'm basically taking the summer off. But with that, I can reference my last organization, which you mentioned, Carrot Fertility, in terms of the background. Global benefits platform, primarily selling through employers and health plans. We're over 10,000 on the platform, advisors, consultants, experts, clinicians, and care providers, serving members in over 130 countries worldwide. It was a fully distributed workforce with just north of 100 million ARR. There were approximately 450 or so employees, and the finance team consisted of approximately 20 employees. So there was a CFO, and then myself as the SVP of Finance. And then after that, we had a senior manager of FP&A. We had a couple of FP&A analysts. We had a controller who had an accounting manager, senior accountant, staff accountant, and an AR specialist. And then we had a procurement director. We had a systems person, sales comp manager, and then of course we had an accounts payable team of 1. And then we had a senior consultant, and then we had a reimbursements team that helped facilitate what we called a Carrot card as part of the product offering. AR responsibilities, kind of soup to nuts. We had, billings, collections, managing the AR aging, resolving customer disputes, and most of the billings were in US dollars, but we did have some foreign currency transactions.
Excellent. Barbara, how about yourself?
Sure, absolutely. I will share background, on my current company. So we do invest in property management, real estate, but the biggest accounts receivable, of course, will be on construction side. We have two legal entity on constructions on which I'm CFO. So currently, we have a large accounts receivable team, which bills our many clients on our many construction projects, mainly here in US, mainly in California. It's mainly, of course, US dollars. Billing is also, right now we are moving to Sage Act, and AR automation is actually very big part of our billings, of our automation. Our revenue growing extremely fast. We don't want to double our accounts receivable team based on that, right? So we want to double our revenue. We don't want to double our accounts receivable team and billing team. So we are considering multiple vendors, but we are considering Billtrust actually very seriously as part of this challenge in automation. We already started with Sage Act, so we will have to make decision and transfer to automation very soon. And I actually use Billtrust on multiple entities, on two entities extremely successful, because with AR automation, instead of actually, first of all, you are saving a lot of head count costs. We are located in California. Our headquarters are in Fremont. So our headcount is pretty costly. With virtual people in the AI, it creates challenge with the clients, and of course, we require a lot of supervision if you try to use lower cost labor. So automation is the only way to go in this life. And plus, you technically, the Billtrust, that was my prior experience, you could establish portal where clients will be paying you. So instead of running multiple reports, we will be just getting paid. So that will release a lot of my time as CFO, as discussions with executives who paid, reviewing of AI agent, classifying it. So AI is always like on the top of my priorities as CFO. We need to collect revenue, right? In order to manage business successfully.
Absolutely. Well, great. And thank you both for your great summaries, backgrounds. So again, this is CP, so we're going to have 4 polls. Here is the first one. Let me launch it. My company has implemented AR automation. So this will give us kind of a point of reference as we discuss AR. Easy multiple choice here, so please use your control panel to answer this poll. Give you several seconds to do. And we really won't talk a lot about the poll results because some of our questions relate directly to these polls as well, but it'll be a good reference. Take a few more seconds. Couple more seconds and we'll close it out. Remember, you only have to answer 3 of 4. So I'm just going to very quickly show that 36% agree and 7 strongly agree. So 43% have implemented, and a large number, almost 40% and almost 20%, so 60% have not. So that is interesting. Hide results, and let's go on to our first question for our panelists. What are some of the challenges your company faced with manual AR processes, and how can AR automation address these issues? Steve, do you want to take that first?
Sure. Yeah, happy to address that. I have a little bit of PTSD, I think, around manual AR. In our last organization that I was a part of, I referenced 100 million ARR, so not a small company, but the processes were very manual, extremely time-consuming to just generate invoices. I mean, there were a lot of, on the back end, kind of audits of the invoices, double checking, triple checking information, following up on billings information, contact information. There were missing fields in our CRM, which was Salesforce, that drove billings. So we had a lot of Salesforce data integrity issues, and the data wasn't clean. So what that meant was we couldn't do any kind of integration with our ERP system. So billings was very manual. We had to create a team, cross-functional, that basically establishing a game plan for improving and ultimately cleaning up the data. We had to document processes and workflows, establishing ownership around the data and data quality and data integrity. And I think one thing that was missing from some time ago is not clearly articulating to the rest of the organization, the sales team, customer success, what the downstream implications of unclean data is. They have no idea that incorrect billings, double billings, frustrated customers, credit issues, delays in collections, those are the types of things that are obviously important to folks in finance. So just having that manual billing process was incredibly painful, to be honest. It took several months. When I say several, I mean maybe closer to like half a year to get things in much better shape. In the end, it caused delays in our month-end close. And as we were trying to improve the time to close, there were times where the staff had to just work more in order to achieve the deadline. That's not really streamlining, it's just kind of brute force. Ultimately, our goal was to do an integration with our ERP system and Salesforce, saving time, improving month-end close and that type of thing. But I would say not automating created a lot of extra work. The risk of mistakes was high, frustrated staff, frustrated customers, because there were invoices going out that were double charges or incorrect charges. There's an impact on your DSOs, negatively impacting your cash flows. It just becomes more glaring the larger an organization gets. You can, quote unquote, get away with not automating when you're much smaller. But as a company is growing and scaling, it really is important to streamline and automate as wherever you can. And at the end of the day, what you want to do is to improve your time to close. Having a system in place will improve your DSOs. You're free up your staff time, so they can do more strategic type work. Higher morale, in my opinion, because the work can get so frustrating and so monotonous that teams' morale will suffer as a result. And you want a scalable solution. As a company, again, is growing and scaling, you don't really need to hire as much. You want a solution in place that'll really augment the staff.
Excellent. Thank you for that. Barbara, how about your challenges?
Oh, yes. I mean, I actually really like, Steve answers. He highlighted a very big challenge with all that errors, problems that go actually to CFO level and sometimes even to shareholder level. When in our company, the largest subsidiary we have at Recon 360 construction company, we do have both short-term accounts receivable and long-term accounts receivable when you work with lawyers and get paid later. So that AI management is extremely important. We did try to, before we make that decision to automate, we faced numerous challenges. We did try to solve a very high headcount cost due to manual processes with using what we call virtual assistants. But of course, they're not virtual, they're just people working from Philippines and coordinated from a company, which does reduce cost, but it increases quality because technically, first of all, they require a lot of supervision, and supervision on such important area as accounts receivable have to be done here in high-cost California headquarters, requires a lot of time. But second, of course, you cannot imagine interaction of people from Philippines with your dear customers, so it's really, again, high cost from California headquarters. Classifications errors, which are highly highlighted by Steve. Case problem, I corrected them top level as CFO. That should not have happened. Our shareholders were noticing on their major contract payment, unpaid invoices, right? Duplicate billings. So all those, and I mean, your business, you have to function, bring revenue, you have to bring cash here. So of course, if you are not bringing in all your AR ratios, DSO, if you are not bringing in cash on time, you have to go on credit line onto your shareholders, and working capital does cost you money. So it creates additional cost from the company. So challenges are huge, right? And there are only three ways. Either you do it manually, and I'm a true believer in, and if you are small, you should automate it, because it does negatively impact your gross margins if it is not automated, because in US we do have high cost, and it is very challenging to do it from abroad, because this is customer facing, right? So do it with offices outside of US, very challenging, will impact quality, and of course automate. And right now we are at that stage that we clearly do need to do automation. And I mean, hopefully with I mean, such great solution as Build Trust or other vendor, but Build Trust, I mean, is amazing solution that will save us a lot of headcount costs here in US, right? We will not be doubling our staff when we grow our revenue, and they will have actually great face in front of our customers. We will not be doing duplicate invoices. We will not be asking them to pay after we miss some payments, like for 6 months, right? We will ask about your controls. How could you do business for us, right? If you don't control your back office processes. So we are extremely looking forward. I mean, they are exceptionally looking forward to that automation to address all that numerous problems. And especially, I mean, it is very important to select AR solution, accounts receivable solution with AR, right? Artificial intelligence tools like Build Trust has, because it means that more and more processes will be automated instead of using headcount costs, which are very high in California. So very similar experience to